Hey, what's up guys? It's Schein with Remax of Valencia. It has been a long time since I made a video, and this topic in particular I feel is overdue. I've had a lot of conversations over the last few months with clients, potential clients, friends, about where home prices are at right now. And typically the way people feel is, holy cow, these prices, they're so high, it's not sustainable, nobody can afford these homes, prices are gonna come crashing down because we're in a bubble. So this is going to be a very important video, especially for those of you that are making your buying or selling decisions based on what you think is going to happen with the housing market in the short term here. So first things first, yes, prices have gone up dramatically ever since COVID happened. February 2020, 2 years ago, median sales price was about $200,000 less than what it is now. We've seen a 44% increase in the median sales price just in 2 years. That is shocking, but here's the thing. When you're not studying the market and the data, it's really easy to draw that conclusion that we're in a bubble right now. But there is one metric that you could use, it's the most reliable one, to know whether or not prices are going to be coming up or coming down. And I'll talk about that a little bit later in the video. But this term, the next housing crash, this is an overly used and abused phrase. It's used as if the housing market crashes frequently or like it happens in cycles. 2008 was known as the housing crash. The housing crash, because it's so rare. It's a once in a lifetime event. I think what's happening is people are confusing that what happens in the stock market, because the stock market, you see a correction happen usually every 10 years. That doesn't happen in the real estate market. That's what history will show us, and I'll show you right now. So if you look at the last 120 years, from 1900 to 1945, we saw home prices stay relatively flat. And then from 1945 to 1991, we saw 45 years of home price appreciation. Prices went up for half a lifetime before it had its first little correction. And it was a little correction. It was about a 2% correction. But if you notice, this whole 120 years, we only saw the housing market crash one time, 2008. Guys, that's how rare a housing market crash is. Now, I understand that when you look at the year-over-year percentage increase in home prices, you start to think, well, what we're seeing now is what we saw before the '08 crash, and that's true. But you need to look at why the prices are rising. It's not good enough just to say prices are rising fast, it's a bubble. Why are they rising? Are they rising due to some unsustainable reasons? Back then, it was rising because things were fundamentally wrong with the housing market, primarily due to subprime lending. Now it's simply just supply and demand, which is the #1 driving force of real estate prices. So it's not a bubble, it's a supply shortage. That's what it is. What's happening right now falls directly in line with a basic understanding of supply and demand. When you have a lot of people that want something that there's very little of, the price of that thing shoots way up. It's a completely different reason why home prices are rising today versus before the '08 crash. How else is this different than '08? Well, we no longer have the excess inventory of housing and high vacancy rates that we had back in '07. Actually, right now, we're near record lows of vacancy and foreclosure rates. The inventory shortage is so severe, we could have tons of homes come on the market right now and it'll still be a seller's market. We are 5 million homes short nationwide of meeting the current demand. In Santa Clarita Valley, we're about 2,000 homes short of meeting the current demand. So, guys, we could be in this for a long time. On top of it, back then, everyone was pulling all the equity out of their home, right? Now, we have an all-time high of homeowner equity of about $10 trillion. If you wanted to pull all the equity out of your home, lenders won't even let you do that anymore. They have what's called tappable equity, and that means you have to leave a 20% buffer of equity in your home. So we have new policies and regulations in place to prevent another '08 from happening. On top of that, the big culprit of them all was the poor, irresponsible subprime lending. Check out this graph. This graph here just illustrates to us how strict or not strict lending was over the years. So prior to the '08 bubble, the number was as high as 900. That means very loose standards, loose underwriting guidelines. Anyone with a heartbeat got a loan pretty much. Then once the crash happened, it went all the way down to about 100. Now we're not much higher than that. So lending is being done so responsibly compared to back then. On top of that, I don't know if this is still in place, but I know last year, the Consumer Financial Protection Bureau, which is an organization that came into existence after the '08 crash, They were issuing a warning to lenders saying if you don't work with homeowners to prevent foreclosure, then you're going to get fined. So we don't want to see another '08. No one wants to see another '08. That's why there's new policies and regulations in place that didn't exist before to prevent another '08 from happening. Now, if you remember earlier in the video, I said that there is one metric that you could use to determine whether or not prices are going to be coming up or coming down. And that's the number of months of unsold inventory. That is the real indicator which direction prices are going to be going. How does this work? You take the current rate of sales and you divide that by the current number of homes that are for sale. And that gives you the number of months of unsold inventory. So if no new homes came on the market, how many months would our current inventory last? So let's talk about this. So if you have 6 months of unsold inventory, that's considered a neutral balanced market. Anything less than that is considered a seller's market and prices go up. Anything more than that, it's considered a buyer's market, prices go down. So what do the months inventory look like out here? Well, in the Santa Clarita Valley, throughout all of 2021, we had about 400 homes selling every single month. Right now, we have 382 homes that are currently pending in escrow. And how many homes are for sale? Just 166. We don't even have 1 month of inventory right now. We got about 2 weeks of inventory. We need about 2,000 homes to come on market in order for us to meet the current demand. We need about 10 times more inventory to come on the market to meet the current demand. In the San Fernando Valley, I don't have the exact numbers, but I think we got about 1,500 homes in escrow and there's only a little over 1,000 homes for sale. So that's about 3 weeks of inventory in the San Fernando Valley. So we don't have 1 month of inventory. We're so far on the seller's market side of the spectrum, we're nowhere close to even being a neutral market. That's why I'm saying we could be in this for a long time. And by the way, just because you see a few homes do a price reduction or coming back on market, that does not mean the market is turning, right? I had a lot of people saying that back in December because that's a common pattern in December. And everyone's saying, oh my gosh, the market is turning. And I said, no, it's just a seasonal pattern, right? So let's not confuse a seasonal pattern with the market turning. Just look at how many months inventory we have, and that'll tell you if the market is turning or not. Now, here's another thing. If homes were not selling, if people could not afford these homes, then we would see homes taking a long time to sell or just not selling at all. Well, in Santa Clarita Valley, homes right now are selling in about 7 days on market. San Fernando Valley is about 12 days. Homes are still selling fast with multiple offers. So yes, people are affording these high home prices. You don't have to like it or believe it, you just have to realize it, and that is the reality today. So are people just overpaying for homes and homes are just overvalued right now? Well, not when it's happening to every single home and everybody's doing it. What it means is that just becomes the new value. Business Insider says by next year, they expect price appreciation to go back to the normal 5% a year rate, but prices are likely going to stay permanently higher. Right? So if we can't expect prices to drop anytime soon, what's a more realistic expectation? I think we'll have a slower, more normal rate of growth. Maybe we'll even have a correction in a few years. Who knows? I can't predict these things. But let's just say we have a correction in a few years. Who's to say prices aren't going to go up another 100 grand before then? Still leaving us with prices higher at the end of the correction compared to where we're at right now. Right? On top of that, we got some current events that might impact things here. Since the beginning of the year, interest rates have risen about 1 full percentage point. Right? All the experts were saying by the end of the year would be at maybe a 4% interest rate. We're already there after the first 2 months of the year. So I think that that's priced some buyers out of the market. It's maybe not as competitive as it once was. On top of that, we got this terrible war that's going on with Russia and Ukraine. And the way that could affect real estate is people tend to take their money out of the stock market when there's a geopolitical crisis like this. And they want to park their money in a safer investment such as bonds. When a lot of people invest into bonds, mortgage rates tend to drop. And that makes housing more affordable, which can cause prices to rise even more. So understand this, when the S&P 500 corrects by about 10 to 15%, money tends to surge into real estate for this very reason. If we include the recession, the COVID recession that we just went through, home prices have gone up in 4 of the last 6 recessions. So with all that said, no, I don't believe we're going to see home prices dropping anytime soon and the housing market crashing. That's a once-in-a-lifetime event. and we would have to have some totally unpredictable, unforeseeable black swan event happen for that to take place. And even if we did have a temporary correction, keep in mind the bear markets never last as long as the bull markets, right? So if you're planning to stay in your home for a very long time, you shouldn't even have anything to worry about with a short-term correction. Plus, keep in mind, we have the largest group in the world, millennials, that are now in the home buying ages. So I think we're going to see demand high for a very long time. But the good news, I think the wild, wild west of the crazy sellers market is behind us. I think that was summer of last year, and we should see a more normal rate of growth and competition moving forward. I don't have a crystal ball. I can't predict the future, but what we can do is just keep an eye on the fundamentals and the data of your local market, because remember, real estate is local. And if you start to see the number of months inventory increase, then we could start to reasonably say, okay, if this pattern continues, then maybe we could see prices start to drop. But right now, at this moment, we are on the extreme opposite end of the scale of it being a super hot seller's market with not even 1 month of inventory right now. So don't try and time the market. As you step out of the market, every day that passes, real estate prices are going up. So make sure you like and subscribe, follow me. I will keep you in the loop if the market does start to turn. And you know what? If you have any questions, comments, concerns, feel free to reach out to me. Schein with RE/MAX of Valencia. I serve sellers, I serve buyers, I serve investors, and I'm happy to serve you. See you at the next video.